I want to go over the trades on the day. There were not a lot of signals and a lot of back and forth price action. I'm going to go over the Zig Zag Indicator as well, minus 270 on the 1 micro SI, minus 650 on 2 micro SIs. Sometimes the automation results are slightly different with slippage and commission in different workspaces. The hypotheticals that we're still tracking from our other portfolios are plus 950 on the 50K portfolio and minus 2230 on the 200K portfolio. New worst case drawdown here. So let's look at the Zig Zag Indicator on Friday. We released a video this weekend, showed you this new all-time high, 75, 50 plus point reversals on January the 24th. It was at 24 on Friday. It's at 16 today. Here is that indicator. You can see the number of, the way this market moves, it moves down, looks to get you short, moves up, looks to get you long, moves down. And so we're used to seeing, we're not used to seeing this many reversals. We're not used to seeing the market have this stop running reversal cycle for this long. We're used to seeing stop running markets. We're used to seeing choppy markets, and those are typically cyclical. It's February the 7th. We haven't had a real good trend day all year in 2022 so far. There were some pieces of trends or parts of trends in some days, but we haven't had a decent trend. We are due for a trend, potentially 1,000 points in the NASDAQ one way or the other. Trend exhaustion, in my opinion, is what we are seeing. And you see that right there, 16. 10 is a good number on that chart. I'm going to show you that again. So post-pandemic, you see the 2020 pandemic high was right here at 62. And here is the 10 level. Dropping below 10 is a good number. We're at 16. And so markets have exhaustion moves up. They have exhaustion moves down. And they have exhaustion moves in both directions with volatility. They're exhausted with massive volatility. And markets can, after a long period of low volatility, become exhausted with overly low volatility. Right now we're exhausted, absolutely exhausted to the worst levels I've ever seen of choppy volatility, and so we have scaled back, and that has worked well for us. Even though the strategies we're trading right now are in a drawdown as well, they are a smaller trading the micros than we are trading the bigger E-minis or regular futures contracts. Let's go over the trades on the day. Looking at these on a 10 micro level, there was only 4 ES strategies that traded, plus 200 on gap fill master per 10 micro, so 20 per micro without slippage and commission. There were 3 trades on adaptive moving average, minus 5, 12.50 per E-mini, minus 51.25 per micro. And after hours, minus 700 per E-mini, minus 70 per micro. And night trader, plus 700 per E-mini, plus 70 per micro. So let's see, we were down just a little bit on the E-mini. S&P and NASDAQ, we had 3 trades. We had 3 trades in the EVP1. You can see here, this is the type of market that we're getting. This is a good short right here. The market, on Friday, it rallied up here, and then it was a pretty hard sell-off. The saying that the amateurs trade the open, the pros trade the close. That was, to me, this is indicative of a down day, and we did indeed end up down. Volume sum totals were down in a strong way, but the market didn't sell off strong, and it fought that downtrend pretty hard. You see, we sold here in line with the afternoon sell-off on Friday, and it ended up going down, but it bounced quite a bit. And it kind of went down here, and then it bounced some more. Got long here and then rolled over, and then we got long into the close. You see this rip-off rally right here where we were short on VSD, and I'll show you that. VSD long short. Here's a strategy that trades a lot. It's one of our active strategies. Goes short, goes long, goes short, long. Starts to make money, rolls over to the short side. Looking like a good trade, comes all the way back to break even, then rolls over. Looks like a good trade, and then boom, pulls right back up in here to these levels, which are the lows at, this is a 24-hour session, so it's kind of in this, pulls back to the range of the overnight session, pulls back into the range of the day session early in the day. There is no distribution from this point lower because it pulls right back into that range, and so makes it challenging when there's no real distribution. On what should have been another down day, I've talked about how markets that look like they should roll over end up rallying, and once again we have that here, making it difficult. So long cycle to chop, trading small or not at all. You may scale back to 0 contracts in this type of environment, but I think we're due for a cycle of trend based on that indicator, the zigzag indicator, coming back down here below the 10 level. And so yeah, those are the trades on the day. 3 NASDAQ strategies traded, 4 S&P strategies traded, and that's February the 7th, 2022. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.